Hey everyone, Brian Bogner along with Greg Towner with Parallel Portfolios, and we're excited about this month's episode of the 20-minute market breakdown here for the month of June. As you know, June, of course, is kind of like, right, Memorial Day is there in the end of May, and then June really kicks off the summertime. And, here in the Southeast where we live, it is definitely summertime. It's hot, it's humid. I feel like the wind's died down. It's been great. How you doing, Greg?
Yeah, I'm doing well, but amazingly, it's not just the Southeast. My family up in the Northeast, they're going to be getting some 90-degree plus, so that's quite a change for them.
Okay, because I mean, when we say northeast, that can mean a lot of things, but we're talking way upstate New York, so that is
Yeah,
very high for them. Wow,
yeah, they're going to get in the 90s, so
that's
it's not
this
just
weekend, I
us.
think, right?
Yeah, I think so. Yep.
Oh, yeah. Well, all right. Heat wave coming through. So, hope you're able to cool off, get in some water, and have a good time there. All right, let's go ahead and dive into it. Today's episode, we are going to address three perceptions, right? Three things that we've been hearing a lot from our clients and friends and all kinds of media, even the media and things like that. And here's those three things. One is that the presidential election is massively important for the market and stocks. We're going to talk through that. The second one is that, look, if the market is at an all-time high, which it is right now, you really need to be careful investing in it because, it's at that all-time high. We're going to talk through that. And then the third one is that real successful investors rarely make mistakes. They're just always successful each and every year. So we're going to go through those three things because we've been hearing about it all the time. So here recently. So let's go ahead and dive into it. Greg, all right, we're in an election year. Obviously, if and it's likely going to be Trump and Biden. We don't want to go there in terms of talking about the political side of things, but well, it's going to be really important because whoever gets elected, right, is going to determine how the market's going to go, right?
I mean, that's certainly the perception. I think people are generally getting a little more educated on that,
Hmm.
but by and large, you still hear it. Of course, we talk about this. It feels like every month, every call, but there's a reason for that. It's still if we're having a call here, Brian, about perception versus reality, this is still near the top of the list that we have to talk about. The reality is much different. I mean, we can just look at the most two recent presidential elections as obvious examples. I
Right.
mean, 2016, Republican won and market, went up immediately and then reached new highs. 2020, Democrat won, market went up immediately and has reached new highs. So those two examples are, clear proof it didn't really matter. But you could really go back over time as well. And I was looking at a study recently, went back to the beginning of the S&P 500 in 1957, and it looked at the average returns for Democrat president during that period was, let's just round it off, 10%, Republican 6%. Okay, so there's a difference there. However, if you look at the median, which this, we don't have a lot of data points, there hasn't been that many presidents, so it
Right.
helps to sometimes throw out the real, exaggerated differences. The median, the Democrat was up 9% and the Republican 10%, so a little bit of difference there. So, I mean, the reality is there's just not enough data points for presidents over time to really be statistically important. I think the one thing that we can say with reasonable confidence that from an election standpoint that has some relevance is investors have tended to like historically a divided Congress. And it didn't matter whether it was a Democratic president or a Republican president. They didn't want the
Right.
party in power to have all the power.
Right.
So, I will say that even when there was entire, sweep, so to speak, the market was still positive during that period, just not nearly as strong.
And I think too, it's important to say it's not that the president election doesn't matter. Of course, it
Right.
matters. I mean, it matters in a lot of areas of our life. But again, there's when it comes to the market, which is, a great reflection, obviously, of the economy. There's a lot of other things that matter as well, right? Interest
Yeah.
rates, Fed policy, inflation, right? Which is, actually been coming down a lot here. I mean, so don't like I think what we're trying to say here is whatever your political view is, making that connection with how you invest your money can be a very, very dangerous thing. So,
Yeah.
because no matter, I think you have to realize we sometimes the market is not an inanimate thing. These are companies out there with really smart people that, and with lots of resources so that they're sitting there and then, okay, if this person gets elected, whether it's regulation or all these other things that may come down the pike, many of them are able to adjust. Now, it may not be ideal or may not be a little more difficult, but they're able to adjust over longer periods of time to do it, to deal with that. So just know that, right, that we've got enough to worry about with this election coming up in the media. Let's not tie our investing to it. All right, let's get to the next perception here, Greg, is that, the market right now is at an all-time high. I mean, here we are with all this uncertainty in an election year and what the market's at an all-time high. Well, wouldn't it be super dangerous to invest right now?
Well, I'll tell you, I feel so strongly about this one, Brian, that this is actually going to be the next white paper that I write for the firm. Eventually, when I create some time to do that. I just think there's a lot of great data out there that shows, the reality against that perception. And just I'll just give one example here. JP Morgan recently published a study looking back over the last 35 years. And they compared, okay, what if you invested at a new all-time high versus just investing on any random day?
Mm.
And over the 1 year period, investing at a new high, you got about 13.5% return versus 12% for any random day. So about 1.5% better investing at new high. Over a 3 year period, it's about 48% to 40. So 8% better investing at an all-time high. Now, I mean, obviously we know timing the market is really difficult. But, when we look at what we believe in, one thing we don't talk about that much, but we are big believers in is trend following.
Right.
And it's just kind of the belief that when things are going well, things are good, they tend to keep going well
Right.
longer than people think,
Right.
sticking with your winners. So to us, corrections happen today all the time. They can continue to happen. Of course, at some point, there's going to be some bear market. That's inevitable. But people that are reluctant to put their money to work just because stocks are at high, they often look back and say, "Oh, well, they were cheaper then than I thought they were, or there was a better price point than I thought they were." So,
Yeah, I mean, we are trend followers here at Parallel, and we do believe that, when if you're dealing with, you want a lot of things moving in your direction. And when a market's making all-time highs, there's momentum, there's forward movement. I mean, there's a lot of good things that typically are happening when that happens. So it's
yeah,
good, good,
yeah.
good point there. All right. This next perception here that successful investors rarely make mistakes. They're just always successful all the
Yeah.
time, and never make mistakes and always pick the winners and that. Let's talk about that.
Yeah, absolutely. I think a lot of people in a lot of different lines of work can relate to this speech that tennis great Roger Federer gave recently. And it definitely got passed around a lot in our investing world because it just really resonated with all of us. And he said, as far as his career in tennis, that he won almost 80% of his matches. Obviously, incredibly impressive. But he pointed out that he actually only won just a little bit over half of the actual points in those matches. So his kind of quote related to that is you just can't dwell on every shot when you're losing about half of them. And that just really hit home to me because I know I've looked at a lot of studies over the years about how successful or how frequent investors and traders have success. You can see any different number, but somewhere in the 50 to 60% of the time do they consider their investment they make a success. So again, roughly half. That's
Right.
a lot of losses to dwell on and feel the pain of. But what really resonates back to our trend following comment from before is if you stick with those winners, they tend to be really outsized and take you to, financial accomplishment or a victory
Right.
in his case. When you're cutting those winners short, you don't tend to benefit as much. And so you stick with your winners, you get rid of the small losers. And to us, that's just really resonated from the investing side of point.
Yeah, and I think too that again, I think it's just human nature is
Yeah.
that when you go into investing, you will lose money. You will have investments that don't pan out well. And yes, what I can think our human nature is we tend to really focus on that and dwell on that and just think about that and let that just, head trash play over and over and over and over and over in our minds. Again, if you have a plan and a process in place, it's already baked into that plan that you're going to have losers, and having a plan, a risk management plan to deal with them and move on. And
Yeah.
I can't tell you how many times I've talked to investors and they're like, well, I can't sell it now. I said, why? Well, I'm down 30%. I'm down 40%. Well, first of all, you're down 30, 40, 50%, whatever, because you just, you refuse to sell it. Now you're like, well, I can't sell it, and it's like,
Right.
well, this thing could end up, it could end up at zero. And, sometimes it's just, you got to move on. And
Yeah.
that's part of doing this. That's part of investing and taking these risks. So, all right. I know we said we only had three things to discuss, but I lied. We do have three more quick things here, and it was from a recent poll. And when Greg and I read this, it really blew us away about what the perception is right now. And this was a very reputable poll that was done, and with a lot of different folks. But there were three things that they believed in. Like one question was, is the U.S. currently in a recession? All right. So here's number one. 56% believed yes, that the US is currently in a recession right now. Greg, what do you have to say about that?
Yeah, I think that was the perception, the part of the poll that got the most headlines, understandably, which blew us all away because I mean we're not certainly not in a recession. I mean, if you look at just the basic GDP numbers, fourth quarter last year, 3.3% GDP, it's in line to above historical averages. First quarter down, it was up 1.6%. And now we're nearing the end of second quarter. And the last estimate I saw someone over 3%, but let's just call it in the 2 to 3% range.
Right.
Those are solid long-term growth numbers for GDP. So it's just amazing that more than half of people in this large poll thought the US was in a recession.
Yeah.
Amazing.
And okay, so same poll.
Yep.
Here's another item, is that the stock market. 49%, almost half of the people polled, believe that the stock market is actually down for the year.
That again, amazed is I don't know what other word to use, but I mean, both now and when the poll was done a couple weeks ago, the stock market was at an all-time high. At the time of the poll, it was up 12% for the year, the S&P. And again, so half of
Right.
responders thought the market was down when it was actually up
Yeah.
12%.
All right.
Yeah.
All right.
Incredible.
The third one here, third perception on this poll, which again blew us away, is that, and it's same number, 49%. So, I mean, you just round it and call it half, believe that unemployment is at a 50-year high currently right now.
This one probably got the least headlines, but it's actually the one that amazes me the most.
Yeah.
Half the people thought we were at unemployment 50-year high. We just now ended a 27-month streak of sub 4% unemployment. That's the longest such streak since
Right.
the 1960s. So not only do we not have the highest unemployment in 50 years, we've recently had the lowest since the 1960s. So really just amazing. I know there's obviously a lot of takeaways from this. And what do we talk about all the time, Brian? Avoid the noise. And this is exhibit A of why people
Right.
are so negatively impacted by, social media, news, political views, the embedded inflation, whatever. I'm probably things I'm not even thinking about that makes up these results of these polls.
Yeah, the media is not in the business to give you accurate information to help you make good decisions. The media is in the business to sell advertising, and how they do that is by creating an emotional response so that you click, watch, look, do whatever, engage with them so they get more views and they can sell advertising. Guess what? Fear sells more than joy. So they're going to obviously spend more time with that than the reality. So it's our job here at Parallel Portfolios to make sure that you can see through that and get some reality, get a good shot of reality in a lot of the perceptions that are going on around. So, all right, well we'll go ahead and wrap that part of it up there. We do like to end these podcasts with just a little bit of some recommendations or kind of things we're looking at. So, Greg, what do you got for us this month?
A couple of things. The first one I have is really kind of in a niche area of things. I don't know how many people will like it, but I think you will, Brian. So we'll go with that. Lael Wilcox, the incredible endurance bicycle rider,
Hmm.
she is currently 3 weeks or so into her attempt to break the riding around the world record.
Wow.
She left from Chicago, I think it was on or just before Memorial Day. And so she does a daily podcast at the end of each ride, just 10 minutes long,
Hmm.
just talking about, where she is, what happened that
Yeah.
day, the mileage, riding like 175 miles a day.
Wow.
Um, and then what's amazing is she's pre-uploading all of her ride on Komoot. So hundreds of people are joining her along the way out there just to say hi and to ride with her for a short stretch and give her food. And, it's just turning into
Mhm.
like this big travel party. So it's pretty interesting short podcast, whether you're into cycling or just travel to listen to.
That's almost like the Forrest Gump when he started running, and towards the end,
Yes,
he had all those people running
exactly.
with him.
Exactly.
Yeah.
It's pretty interesting. Well, and then my other thing is, this very much ties in with that last, poll that we talked about. Just again, reiterate and remind everybody, just be
Mhm.
careful of the news sources that you use
Yeah.
and challenge what you read or hear, look for another source. Is it factual? Just double check everything you're hearing, just this day and age, especially with, artificial intelligence and what have you.
Yeah. Yeah. Absolutely. That's great advice there. And I just have one. Actually, you already mentioned it. I guess we've been talking about it for a little bit. Is if you get a chance, go to YouTube and type in Roger Federer Dartmouth commencement speech. There's the entire speech is only 25 minutes. There's a like a 2-3 minute kind of highlight thing that'll probably also pop up you can watch. But I highly recommend it. It's so well. I don't care what you do in life or anything like that. It is just a great listen to. I mean, he gave a fantastic speech that applies to all of us in some form or fashion. Of course, he's one of the greatest, if not maybe the greatest tennis player of all time. Just and really gives some great things in that speech. So, all right. Well, in that, we will go ahead and call it. I can't thank you so much. I can't thank you enough for listening in today, and we look forward to talking to you and with you next month. If you have any questions, give us a call, shoot us an email. You know how to reach us, and we'll talk to you later. Thanks.